In this video, I want to show you a step-by-step guide on how to trade fair value gaps on any pair at all in the forex market, especially in the counter trend position. So watch this video all the way to the very end. The first thing here is, if you consider this very pair, USDJPY, and if you look at this position, market was coming back down. It's very clear that market hasn't coming all the way to the downside. So let's say, for example, we want to take a position, market dump all the way to this very point. We have the market move all the way to the downside, and then we have this very consolidation. So let's say we want to take a trade for a counter trend position for the market to move from here upward. What are we going to do? Using fair value gaps. The first thing here is to identify fair value gap on this very movement all the way to the downside. That is this impulsive move, so that we can take a position after certain parameters are met. And the first thing here is that identification of fair value gaps on our impulsive move. So the first fair value gap we have right here is this very point, this very area, which have been mitigated a little bit. So we will still draw it out, okay? And the next fair value gap we see at this very point is this very area. We have a small fair value gap right here, which have also been mitigated at this very point. So we will still draw this out, even though it has been mitigated, okay? So we'll draw this out. So this is another fair value gap right here. So we have two fair value gaps that are very important on this very price action as market was moving downward. The first one is here, which have a little mitigation at this very point, and the second fair value gap is at this very point, which already have mitigation at this very area as well. Now, one thing very important is that if you want to take a position right on this very point all the way upward, what you need to do is, first thing first, you have to draw your trend line from this very point to this very area where this fair value gap was first mitigated. So I will take my trend line and I will draw from here to this very point, and then I will look for a breakout. First thing first in this very strategy is that you look for a breakout, and the candle that breaks out is this very candle. Now the second thing you look for is, we want to ensure that our candle, that is the bullish candle, close above this very fair value gap right here, so that we can take a trade. And if you look at this very structure, you discover that this very bullish candle right here did not close above the fair value gap. It closed inside the fair value gap. Therefore, we will not use this one. If you go right a little bit, you discover that this very candle close above the fair value gap, and this serve as our entry, which is very important because we want to take a counter trend position from here all the way to the upside once a bullish candle close above this very immediate fair value gap after this trend line has been broken. And that is what we want to see right here. So exact same thing we see with this very bullish candle at this very point, okay? The fair value gap have been closed by this very bullish candle. So once that happens, we want to take a trade immediately after the close of this very candle right here and take a position, a counter trend position upward. Now, what this does is that it gives you a guarantee that the market is going to definitely move in that direction. Because you see, a lot of people, when they want to take counter trend position, they don't know whether the market is going to move in that direction or not. But if this fair value gap right here is closed, as you can see, it means that it is a guarantee that the market is going to from here move all the way to the upside. So what we want to do right now is to take our long position 2 from this very point and place it at this very point where we want to enter the position, and then our stop loss, since this very fair value gap have been closed by this very bullish candle, we'll set our stop loss very, very tight, okay, at this very point, okay, below this very candle. And our take profit target is going to be inside of this very fair value gap, okay, which is very important. And you are looking for 1 to 2 risk reward ratio. So I will move this into this very area, and 1 to 2 risk reward ratio is a guarantee for the market moving upward. So if you look at how the market go, you see the market begin to form. We see this very movement in the market, and then you see the market hit our target right at this very point. Now, one important thing about this very methodology is that if you check on your chart, in a counter trend position, once a fair value gap have been closed in this very case, market have capacity of moving upward significantly before the next move in the initial direction. Like in this case, you discover that market move all the way to the downside, then we see retracement right here, and the market continue all the way to the downside. So this is one of the most effective way you can take a counter trend position using fair value gaps. The next example is on Euro USD. If you look at this very chart, you discover that the market has been moving downward. We see the market move from this very area down. Impulsive move, we see retracement. The market move another impulsive move again and create a new low right here, lower than the previous low at this very point. What does this mean if you want to take a counter trend position upward using fair value gaps? The first thing you need to do right here is to identify fair value gap on the last impulse to where you want to enter your position. So if you identify fair value gaps right here, we have the first fair value gap we see on this very price action is at this very area, on this very impulse is this very point. We have a fair value gap right at this very area, okay? And the next fair value gap as well that is on this very price action is this very point from here to this very area is another fair value gap. Okay, so we draw this out as well. The next thing we want to do is to draw a trend line from here to this very point. So we have to draw a trend line from this very area to this very point and wait for a breakout of the trend line, which is very important. If you look at it, this very candle right here breaks out of the trend line, but this was below the fair value gap. This very fair value gap right here, the candle closed below it, although it entered the fair value gap at this very point and caused a mitigation. We want to see a bullish candle that closed above the fair value gap, that is outside of the fair value gap. And this very bullish candle do that job for us right at this very point. So what happened right here is that this very candle moved upward and close above this very fair value gap at this very point, which give us a nice position to take for a counter trend trade for the market to move upward, and our stop loss is going to be below this very candle right here. And this is very, very important. When you take a trade like this for a counter trend position, you will be in the right chance of hitting your targets very, very fast. And if you take your buy position 2 from this very point and you place your entry at this very point, okay, where we see this very candle that go outside of the fair value gap, and your stop loss is just below this very candle that mitigate this very fair value gap first of all before this one that close outside of it, and you take a 1 to 2 risk reward ratio, you discover that this market is going to hit your target, which is very, very important. So if you look at how the market go, you see the market begin to move upward, and then we see the market come back down a little bit at this very point, okay, market come back down a little bit and then still move upward to hit our target right here. And this is very, very simple. This is how you trade counter trend position using fair value gap. If you flow through the step-by-step process like I mentioned in this very video, you will trade counter trend position very well using fair value gaps in this very way. And this is very simple. If you gain value from this very video, consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more Forex videos like this one. Also check the channel for other Forex content. Join our Telegram channel, the link in the description, and also the pinned comment for more Forex updates, day trading and investing strategies. Thanks for your support.